Hello, everybody, and welcome to Confident Compounding with Corey Kramer. Today, we're going to be taking a look at ASML holding stock, ticker ASML, and I'm looking at the US listed ticker. So, yesterday, the stock fell over 10%, if I recall, and it looks like it's down another 1% today. I think the news was just weaker guidance or just the outlook looked weaker than expected. So these guys are semiconductor equipment maker based out of the Netherlands. Generally follows similar pattern to other semiconductor equipment makers in that. So the first thing I want to always check here, and I have made a video on this one before, but I had a request yesterday for it and it fell a lot. So I figured there would be a lot of people interested in it. I haven't made one for nearly a year. So what I'm doing here is I'm zooming in so we can see year by year back from like 2005 to 2016 because I wanted to show the earnings decline during the Great Recession. So these earnings went completely negative, so they fell more than 100% and they were lost money in 2009. That's pretty normal for most businesses in the semiconductor industry, because overhead costs can be pretty fixed and the demand can fluctuate quite a bit. Now, in the most recent 10 years, we've been more in a secular growth phase, but it hasn't taken away the cyclicality completely. And we also haven't had like a real recession that's tested the economy and demand for semiconductors the way that 2009 and 2008 did. So to me, when I see this, it tells me we want to treat this as a deeply cyclical business. If we look at the PE going in, well, maybe we even go up to the peak, which was like 23. So with earnings growing over 20% a year. So if you looked at that, it looked pretty fairly valued, PE about a 20. But the problem is when earnings fall and they don't keep going up at that rate, then that really messes up your valuation analysis. So you get over to like here, which would have been a pretty decent time to buy the stock. You know, it was cheaper than it was in 2007. The PE was 70, right? Well, that was actually a good time to buy the stock. It wasn't expensive. If you bought there and held for the next few years, you could have made 400%. So because earnings aren't a good way to kind of value businesses like this unless you do a lot of adjustments. Now, it hasn't had as big of an earnings decline since 2009. Of course, we haven't had a bad recession since then either, but we do see years definitely where earnings growth is negative and then followed by an up year. So a little choppiness, but the secular growth underlying everything is really is risen above, I guess, the small downturns. So this trend is like a really good trend. Like this is what we want to see when we buy a cyclical business. But you have to understand that the stock price can really react big time to any kind of downturn, which we had this one in 2022. Let's see what the stock price fell there. This past graphs isn't going to show me right now. So, well, we peaked out at almost 900 and it went down to 400. So it fell about 55 to 60%. I wasn't tracking it at the time, and I was aiming pretty low. I did buy like AMD and Micron and some other semiconductor businesses down here, but I missed this one. But that can be used as a bit of a guide. If we go farther back in history, which I do here in my spreadsheet, so I just note some of these drawdowns. So 2001-ish era, 90% drawdown. So .com bust, huge decline. This is for the stock price. 2008, roughly 65% decline. And then that 2020 decline, which might have been the 2022 one that I just showed you. I can look and see actually. Yeah, they didn't fall that much here. No. So that's the 2022 decline, 55%. So that's kind of what we have to work with historically. And we have one of them, this 2022 decline, that is pretty recent. So it's not, a lot of times when I do analysis like this, people will say, well, things have changed a lot since 2008 and 9. And that's true, especially for semiconductor business. But it hasn't changed a lot since 2022. So, I mean, I suppose you could add AI in, but really the market's going to treat this like a deeply cyclical business, and it's probably going to sell off the stock quite a bit most of the time if earnings start to turn negative, or if the market thinks that they could turn negative, which is kind of maybe where we're at now. It's hard to say. So if you want to avoid these type of drawdowns and also take advantage of them as an investor, so this channel used to be called the Cyclical Investors Club before I recently changed it because that's what I specialize in. So you want to buy these when they're quite low. Usually I measure it as a percentage off the high. So what I'm aiming for here is I'm willing to start buying it when it's about 50% off its high, because I know that it went down 55% in 2022 and we didn't even have a recession. Also, the peak valuation was like 60 back then, give or take. And this peak here is about in the 50s. So we have a similarly high new peak because it came up and made a new peak. So this peak here is pretty similar to this peak here. And I think if, maybe 2026 earnings stumble a little bit, we could have a decline that's similar to the one that we had in 2022, maybe even without a recession. And that could be why the stock started selling off. It could keep going. Now, the way I do this is I just sit around and wait for my opportunities because I try to buy these when they're really cheap, right? So I want this one. It fell about 45% off its high in April during the tariff stuff, but it didn't quite get to that 50% off the high mark. So I didn't buy this one, even though I did buy several other semiconductor stocks, but I'm still watching it. And of course, there's going to be other factors. We have tariffs. We have restrictions on what China is allowed to buy. We have just general, maybe less usage for AI than maybe we thought. I'm not saying that's the case, but all these issues could come up as news items and they could send the stock lower. Usually what I do is I completely ignore those because stocks usually don't sell off 50% unless the news is negative. So unless it's something, like financial accounting related or something like that, I usually just ignore the news. I watch the prices that I want to buy it at. And when they hit that, no matter how negative things are, I start buying. Now, I might make adjustments and try to buy it a little lower sometimes, but I think in this case, for sure, I would at least add a little bit as soon as it hits 55% off the high, which is as soon as it hits 50% off the high, which is about $555. So I had 55 in my head. So $555 a share is when I would add. That's about 25% lower than it is now. Now, 25% might seem like a lot, but as we've seen in this market, it's fallen like 12% in 2 days. So that is, a week's move potentially if things got bad. I mean, how long did it take for it to fall 45% over here? It peaked in July, and 6 months, call it 9 months later, it's down 45%. And it's already down quite a bit. So it wouldn't surprise me if it comes down, at least test this bottom down here at $600 a share. If a person wanted to be a little more aggressive, they could add at 600. But for me, I mean, if I buy 50% off the high, that usually means I'll sell when it recovers its old high, which is 100% gain. Sometimes if there's a recession, it can take like 3 to 5 years for that to happen. So I want the longer term reward to be worth it if I have to wait 5 years. And that usually is about a 100% gain over 5 years. So I'm not one of the people that tracks daily exactly what news is coming through once I buy a stock like this. So I bought Micron is a good example. You can watch video on that. Back in April, I think it's up close to 100%, like 70, 80, 90% or something like that. You can tell how close I pay attention. Well, let's look at it so you can get an idea for how the strategy works. So Micron did hit my price here, and it's pulling back similarly, right? So it's up 75%. I would probably take profits when it gets up to like 100% return. And maybe it will fall first. Maybe I'll have to wait a while. I also bought it back in 2022 back here, and I had to wait a little while, but it paid off. So I don't check every single news item. I just wait and let time hopefully be on my side. But in order to do that, because I'm not looking for 5, 10, 15, 20% gains, I'm looking for 100% returns on deeply cyclical businesses. If I'm going to take the chance to buy something that can be really cyclical, like you see Micron was losing money here. If I'm going to take a chance on a company like that, imagine if a recession hit at the same time and then tear it. Like if all those hit right in a row, we could be looking pretty rough for Micron, right? Because they kind of got spread out, so it wasn't quite as bad. But those things can compound with deep cyclical businesses. So if I'm going to buy something where I'm taking a little bit more risk and definitely more volatility, which is separate than risk, but not pleasant, I try to avoid drawdowns more than 50%. Which can be difficult if you are buying, like if you buy a stock when it's 50% off its high and it falls 75% off its high, that's a 50% drawdown, not a 25% drawdown. So if you buy a stock that peaked at 100 and you buy it at 50 and it falls to 25, your 50 goes to 25, that's a 50% drawdown. I don't like to buy a deeply cyclical business where it has a history of doing that. Micron is actually one of those, so it's kind of at the borderline. So I'm never going to buy it pretty much unless it's at least 50% off its high. I feel the same way with ASML. So that would be my approach here. Just keep sitting back and waiting, and it might not hit, right? Like this time it didn't hit. I missed it, but I got other ones. So I watch a lot of them, and sometimes I get lucky and I just bottom tick them like Micron and AMD and Microchip Technology, all those about in April. Sometimes that happens. Sometimes you buy them and they keep going lower, but ultimately over like 2 to 5 years, you want them to recover. That's the goal. And history's shown that the market's willing to pay this price twice in recent history. So this peak level, roughly the same valuation here. So if you can get it cheap, odds are if they improve their earnings over time, which they have a history of doing, you can make good money without doing really a whole lot of work. You just have to be patient, both before you buy and before you sell, which can be hard. It helps to have a plan ahead of time. Okay, so that's my thoughts on ASML. A little strategy for you to consider. If it gets down to that $555 level, I'll probably make a video if I buy it. All right, thanks for watching. I have weekly picks over on Patreon, a free tier over on Patreon, so check out those links down in the description, and I'll see everybody later.